We are thankful for your kind presence for as a chief guest for today's first webinar on this banking month. We are starting, and you are a CMA, and I think you are a proud CMA. And we are very much privileged that you are inaugurating today's banking month of 2025 with the first webinar, and also releasing our BFSI chronicle. Uh, just uh, just a short profile. Our teammate Indrakshi Bhattacharya would be stating of yours so that our participants know as a member your profile, and then we'll inaugurate the our BFSI Chronicle 5th annual issue. Over to you, Indrakshi.
Thank you so much, Dipendu sir. It's really a privilege for me to introduce our speaker today, Sri Uday Shankar Mujumdar, and he is also a CMA. Sir, he is a distinguished banking professional with over 30 years of cross-functional expertise. Sir currently serves as the Group Chief Risk Officer of the Canara Bank. His career trajectory is he was the project appraisal officer till 2001 in the Tamil Nadu State Financial Institution and launched his professional journey in project finance and appraisal. Syndicate Bank 2001 till 2020, over 2 decades in progressive leadership roles, including regional head, integrated treasury and international banking, chief risk officer, chief financial officer, elevated to general manager, where he has played a pivotal role in steering the bank's financial and risk architecture. He is till present, he's at the Canara Bank and had led the integration of subsidiaries and associates post-merger, oversaw governance of key strategic entities, promoted to Chief General Manager in 2022, appointed Group CRO in April 2023. He is a member of the Institute of Cost Accountants of India, MBA in Finance, Master of Commerce, alumnus of FSIB, IBIM Bangalore Leadership Program, JIIB certified. His extensive experience and demonstrated strategic foresight make him eminently eligible for executive director level roles in the public sector banks. With an outstanding track record in organizational integration and financial governance, he is well positioned to take on higher strategic responsibilities in the Indian banking sector. We wholeheartedly welcome you, sir. So now I would request Sri Uday Shankar Mujumdar, sir, to please take over.
Yeah, thank you. Thank you very much. I personally thank the Institute for giving me this opportunity. And see, as cost accountant, I always try to uphold the right and competitiveness of the profession. In the bank also, whenever opportunity came, I tried to groom the cost accountants, tried to take cost accountants whenever I was in a position to recruit people from the campuses. And today is a great day when I think our institute has published this chronicle on the BFSI sector. See, BFSI sector is definitely is a emerging sector where the role of cost accountants are also increasing day by day. And this I've gone through this edition, and which is well covered in many areas, many upcoming areas, audit areas, cyber security, and key areas. I think this will be of great use for the professionals who are into bank related activities. And today, in the banking sector is one of the sector which is most dynamic. We are lending in good times, and we are also seeing that how the controls are there. As a chief risk officer of the bank, of the group, Canara Bank conglomerate, where our total top line is around say 25 lakh crore plus. We see the role of cost accountants are increasing, and this chronicle, which is being now just shown here is well covering all the emerging areas, all the emergence, and thanks to these people who are concerned and who are engaged with this chronicle. I think it has been well articulated, and this will be great for these professionals who are engaged in the services. Every area has been, many crucial areas have been updated, and those who have updated, they are from the professional field. They are aware of the nuances of this area. So once again, I congratulate the institute for having inaugurated and issued such a comprehensive dossier for the professionals, and I think we have to keep it as a working manual. So now I'll cover so I'll cover now now I'll cover the role of the CMAs now in the banking sector. See, earlier banking sector, in the banking sector, cost accountants is to be recruited for the purpose of costing of various activities and submission of certain returns, and for some assistance in project financing, where cost accountants have got some experience. But of late, the role has become well spread, because cost accounts are getting empaneled in the bank as a valuer, as a stock auditor. We are taking for TV study, and also some kind of financial consultancy. So all the members who are joined here, I'm telling that slowly the competition is reducing. So as a result, the scope for providing good service, quality service by the cost accountants are increasing. So our members should see that these opportunities are taken, and we can give better services to the banks, especially emerging areas like ASM. ASM is Agency for Specialized Monitoring, and this is the dynamic kind of activity for which banks are taking these professionals. See, banks are not able to monitor the activity performance of the company in a dynamic basis. They have to depend on the professionals, because we don't have access. Only when the company is coming for renewal of their loans yearly basis, that time only they are coming. But this ASM concept has come so that the banks are aware of the companies on a dynamic basis. So wherever the professionals are engaged in ASM services, be extraordinarily careful that the purpose is served. Then comes to the due diligence report. Due diligence report is also another area where banks are increasingly seeking the service of the professionals. Here also role of the cost accountants are improving. And I personally think that whenever TV study is done and due diligence report is done, we are going for the quality, because for banks we do not have extra time to get into these nitty-gritties. On the other hand, bank is increasingly depending on the professionals. So there also banks are dependent on the professionals for the quality service. Now another thing is like stock audit. Historically stock audit is coming and stock audit is generally taken in as a routine manner. The stock auditor goes to the borrower's place, and they discuss with the borrowers and give it. This is where the deficiency of the service is observed by many professionals, by the banks. We are observing this, the deficiency of service is coming from the professionals, and stock audit report is very crucial for the banks. And there are some key points. As a professional, you all know the quality of the stock, measurement of the stock, insurance of the stock, and the value of the stock. So these four principles of stock audit is not sometimes covered diligently. I request the professionals who are engaged here, you please give the cost audit, stock audit report properly, so that the banks can arrive at the MBPF level properly as per the expectation. So here also a lot of gaps we are finding, and we are not very comfortable about the services provided by the professionals in a regular way. Now next is due diligence report. See, due diligence report is also another thing where uh, banks are dependent on the professionals. And here, what I feel the cost accountants should focus on. See, today so many feeders are available. So if somebody is doing a due diligence report from different feeders which are available in the market, they can take the uh, feedback. Because simple Google search will give so many data input, but apart from that, there are so many connected websites and other facilities are available, so that additional information can be given. Whenever we are discussing with the CIC, like credit information companies like CIBIL, CRIF, and all. See, they are also offering some kind of due diligence services, and they are going to the extent of collecting data about the default of a person's electricity bill, water bill, etc. So, to that extent, the credit score related informations are being collected. So, under these circumstances, whenever a bank is seeking a due diligence report, I think the professionals, whoever preparing it, should exhaust all the areas of intelligence gathering, and thereby you give a report which is not ordinarily available. Then also we are seeing that sometimes uh, in the due diligence report there are some early warning signal which are to be indicated. Those early warning signals are not mentioned. See, both ASM due diligence report, everywhere the early warning signals are extremely crucial for the bank, and in fact that is the purpose banks are assigning such this responsibility to the professionals. I think here also scope is there the professional for the professionals to show their increased capacity. Uh, that needs to be acquired, and that early warning signal needs to be incorporated in the report. And for early warning signal also, a lot of feeders are available in the market. From that feeders only you can all take it. Like, see, there are some like a Bloomberg blast and some Reuters information, Pro 42. Okay, so this kind of features are available. MCA website is there, and other public grievances websites are there. Therefore, you will be able to get a lot of information which gives like a early warning signal. In another thing we are seeing that some of the reports informations are given, conclusion has been drawn, but it is not backed by documents. See, today everybody has got legal kind of support. So unless we get a document based on oral assumptions or some hearsay, we cannot come to a conclusion. So I request the professionals to have proper documents so that in case for any kind of legal exigencies, these documents are coming for a support. And especially these documents are required for calculation of key financial issues. There are some financial issues which we are arriving at based on the information given by the professionals in their report. So unless the documents are available, we should not come to a conclusion. And the report, whenever report is given, we are also seeing sometimes the auditors are managing the negative part of the report by writing some language. It should not be the case. So it should be crystal clear. If there is any negative opinion is there, it should be clearly mentioned so that the reader of this report is clearly understands that what is the intention of the auditor to communicate. There should not be any ambiguity. And auditor should visit these borrowers or the counterparties, because visit gives a lot of clarity. And whenever we discuss with a person about the and especially when you are going for due diligence, I think private discussion gives a lot of comfort. When we go to a person, like I personally feel whenever we do big projects, I used to do big projects. That time I used to go to the promoter, go to his house, used to have a cup of tea with them, see who are there in the family, what is the value system in the family, okay, what is their lifestyle. So that kind of thing gives us a different kind of comfort, because a promoter who is doing a big project, he has to pay huge amount of money as his promoter's contribution. Unless he is having this, project will not be taking the light of the day. So if the promoter's background is not supported by this, then project will be of utter failure. And whenever I used to go for such kind of thing, then I used to go without informing the promoter. Suddenly I used to go to see the real picture. Similarly, whenever anybody is doing for valuation, see that the valuation, you should go without any kind of preconceived notion. Just go and find out what is the real value of the assets which you are valuing. So, as I said, in the risk management sector also, a lot of things are coming, and here our professional can be of good help. And I think our professional colleagues also should use the recent technological advancement, like AI also should be used, and wherever it is possible, you try to use AI so that you will be having some kind of problem identification capacity in advance. Okay, and I think our professionals are also working for the ECL calculation. See, now ICL is a part of the IFRS implementation. Now RBI is yet to come out with the final guidelines for implementing IFRS in banks. They have only done up to investment level. That area also, I think there is a huge opportunity for our professionals to support this banking and insurance sector. Because insurance sector also, it is yet to come. the ECL is one such thing where a lot of assumptions are taken place, a lot of models are being used. So if the professionals are, already working on some models, because this IFRS has been implemented in NBFCs. So if any professional is using such models, I think the upgraded version of this or an advanced version of this can be used for the implementation in banking sector, where will be huge opportunity. Many banks have already started working, and only some big four are dominating the market. But I think it is not a domain of big four alone. Everybody has got the stake, and everyone can contribute, and especially our professionals can also do this, rather than going from the going into the areas like conventional areas of stock audit and all. Another thing is coming in a big way, like customer profitability. Okay, customer profitability, because today banks are using lot of product, but there is no proper model, proper framework to arrive at what is the profitability of each of the customer and each of the products, because there are a lot of cost subsidization is there. Some of the costs are not allocable, some of the costs are combined. So I think institute can also guide the professionals to develop a kind of costing model for banking related products, because what has happened in banking is unique in the manner that RBI does not want to make the bank to make huge amount of profit by from the product and by providing some services. Even RBI is insisting for us to justify what is the background of arriving at different service charges. There I am again in my bank, I am using the activity based costing and seeing that for each of this activity, be it giving a service to a counter, be it opening an LC, be it giving giving a loan, closure of loan, attesting a paper, then network certificate. All this thing for this all this activity, we are arriving at the cost by uh, using activity based costing. So I think that is also another a big opportunity which is coming, because I personally, whenever I presented the board about the costing part, whenever we are doing based on this, board is accepting. Otherwise, board is not accepting if it is done in a kind of ad hoc manner. So I think here also, since RBI is also insisting for transparency, fairness, and ensuring that banks are not overcharging for any kind of services. Here also, the opportunity for our professions are on the rise. And then concurrent auditor, I think concurrent audit also, wherever concurrent auditors are there, and stock auditors and concurrent auditors are there also, I think the opportunity is huge. I think now in the bank, many things have been system driven. So I think the professionals also should know how to do audit in a fully computerized regime. Okay, so I think auditing profession is going away from the transaction based audit to system based audit. So in the system based audit, we have to see how strong how robust the system is, and how it is uh, uh, becoming transparent, how it is becoming unbiased, and how it is free from any manual intervention, and what is the consistency of the system. So I think these are the things which has to be seen while doing an audit in a fully computerized environment. So our request our professional colleagues to update about the basic systems and ideas, and look into the controls whatever is available uh, in the banking. And another concept I'll tell you, just for the information of the members, Uh, See, in RBI is slowly promoting the 5 lines of defense. 5 lines of defense means normally in an organization 3 lines of defense remains, but in banking RBI is slowly promoting 5 lines of defense. And 5 lines of defense means these are the defense which is preventing an organization from falling into the trap of a kind of any unwanted situation or in a risky situation. Like whenever our systems and procedures are there, they act as the first line of defense in the bank. For example, if somebody comes to a branch and asks for a loan of say 500 crores, branch manager will not be able to give because system will prevent him, policy will prevent him. So that is called first line of defense. Then second line of defense is policy framework. See, whatever policy is framed by risk management department or policy department, setting up a benchmark, setting up a limit, that is called the second line of defense. That means I am framing a policy in such a manner so that if anybody comes and tries to do that, because of the policy gap, they will not be able to do. And third line of defense is internal audit. So internal audit will catch hold of if there is any breaches which has happened. So if there is any breaches, so breaches will be seen by internal audit, and then that will be plugged. If there is a systemic gap, that will be plugged. Fourth line of defense are external auditors. See, if all the 3 lines of defense breaches, then external auditor will come, they will give MOC, and they will see that, they will inform that these are the breaches which has happened, these are the things which has happened beyond the policy. And fifth line of defense is RBI inspection. If auditors are also not able to find out, then RBI inspection will catch. So these are the 5 lines of defense within which banks are performing. Now, RBI is increasingly focusing on a concept called assurance function. What is the meaning of assurance function? RBI is telling there will be some department in the organization like banks who will not have any business target, but who will give comfort to the stakeholders like board, like shareholders, like RBI, like other auditors. How it is so? Like there is a department called compliance department. This compliance department will see that all the policies are which are framed, policies and procedures framed by the bank is being followed throughout the organization. So they do compliance testing. They also get some kind of confirmation from the different field officials that this compliance is happening, whatever guidelines is there, that compliance is happening. So that is one department. And another department is risk management department. Like I am in a risk management department. So we are framing policies. Wherever I am seeing there is a control gaps, additional policies required, policy is vague, policy is ambiguous, new policy has to be implemented. I am putting the policy, I am framing the policy and setting the things right. And another department is called internal audit department. They are doing internal audit. They are checking wherever the branches have not complied with this and there is a breach. There is a breach of delegation of power. There is a breach in the procedure that is being caught and found out by internal audit departments. So these 3 departments like internal audit, risk management, and risk compliance department are called assurance function. And this assurance function gives a comfort and assurance to the board of directors and also the regulator that the affairs of the company is being conducted or being held in line with the policies prescribed or adopted by the board of directors. So whatever policy is there which are in compliance with the regulatory requirement that are being followed by the bank and wherever there are variations, they are getting reported. So these three departments are thus called an assurance division. So since our professional colleagues are also doing audit, they will also become a flag bearer of assurance function, and they will also help the organization to ensure that the assurance function is robust. We do not have any business target. We have only got the target that we should not have this kind of variations, and anybody cannot come and cause harm to the organization, not physically, but from its core. So there should not be any regulatory breach. All regulatory policies will be there, and compliance will be there in the letter and spirit. Because sometimes RBI also finds that, see, RBI is doing audit of the banks. You all may know that it is not a normal audit. It is called inspection. RBI comes for the inspection, and in that inspection, sometimes they do a proprietary audit. Proprietary audit, I mean to say, they question the spirit of such decision. See, sometimes statutory audit will see, okay, as per policy, so and so can do this act. Then, if it is within the policy framework, statutory auditors will not have any say. But if RBI comes, RBI will see whether it is justified. Although it is as per policy, he has not done correctly. So RBI has got that power to do this. And slowly, RBI, as I said, has moved from camel framework of audit to risk-based audit. Camel framework is the old framework of audit where RBI used to do a tick box kind of thing: capital adequacy, asset quality management, etc. There are 5 areas: liquidity and all. But from there, RBI has moved to risk-based audit, where RBI is slowly telling that I will not see whether all rules are only complied with. I need to see what is your assessment about the riskiness of your activity. In the bank, there are so many activities. I am taking deposit. I am giving loan. I am having locker facility. I am giving non-fund based activity. I am giving checkbooks, and some payment services are given, and recovery is being done. So a lot of activities there. So in each of this activity, there is a riskiness. So bank has to, based on their size of business, complexity, etc., banks have to assess their level of risk and the direction of risk, and they have to see if there is any if enhancement in the risk level, then bank has to take appropriate corrective measures. Okay, so today in the banking sector, unlike earlier times, credit risk, market risk is there. It is a manageable risk is there. Credit risk, market risk, operation risk is there. But one of the big risk which is coming is a liability mobilization challenge, and that is contributing to liquidity risk. Because liability, as at rate of interest is declining, many of the high net worth individual or many of the depositors are shifting from traditional banking to mutual fund. Like alternative avenue, they are going because they are expecting a higher return there. Because they are also pretty sure that the mutual fund industry is also well governed. They are controlled by SEBI, so that is why they have got the comfort. So as a result, liability mobilization has become a challenge for the bank, and then it is giving me a liquidity risk. Giving loan is easier. Earlier, giving loan used to be difficult. Now, giving loan is becoming easier, but getting the liability mobilized is becoming very, very challenging. And that is leading to liquidity risk. So this risk assessment by the bank itself is very high, and uh, as a head of risk, I perceive that this is one of the big risks. Plus another emerging risk which is coming is the outsourcing risk and cyber security related risk. I think these are all been covered in this magazine which has been launched today. See, with the bank, lot of outsourced activities are there. Lot of outsourced activities there because daily so many fintech companies we are engaging because there are some strategic kind of benefit for engaging with fintech companies are there for the banks. So it is becoming a win-win for the banks to get the fintech companies. And as and when I am getting engaged with the fintech companies, the level of risk is going because the kind of system we have got to secure the data, to secure the transaction, encryption of data, uh, those kind of security measures are not totally available with the fintech companies, but they are integrated with us. So unless they are uh, uh, improving their level of security, there is always a gap between the security of the system prevailing in the bank and in the other fintech company. So this way, banks are exposed to high level of risk. Well, because many cases it has happened, data has been shifted, data has been taken by the fintech company from the banks, but they are not encrypted cells elsewhere. The data security breach has taken place. But as you know, DPDP Act is coming in the big way. Personal Data Protection Act is coming in the big way. So this kind of data breach related issue will cause huge amount of penalty proposed in the act. So we have to be extremely careful for having this data and also having this fintech companies using our data. So this outsourcing risk is becoming very high, and that is why we are taking a lot of steps to see that the data used by these companies are well secured, and whenever they are transmitting is also well secured, and they are also conducting audit of their system periodically, and whenever any cyber incident is happening, they have to take necessary precaution. They have to report to the respective authorities, and there are some SLAs, there are some governance standards. They have to ensure that, and they have to give access to the banks for auditing their system. So this kind of practices have emerged because cybersecurity risk and third-party vendor risk is becoming one of the common problem and heightened problem for the bank. Because for a fintech company, they just want a bank to come into their fold and their valuation will go up. But for us, it is not so. We are a long-term player. So as a result, banks should be extremely careful, and we are careful in doing so. So coming to again the role of CMAs, I think they are also whenever CMAs have completed the additional exam like CISA, wherever they are working, I think they are also a very big opportunity because in the IT industry, functional experts are not there. We are seeing for any project, be it a project for credit risk implementation or market risk implementation, IT experts are not fully aware of the functional part, which has to be done by the professional like us. Like we have got a package for preparation of balance sheet. So when that company came, most of them were IT guys only. They were very limited functional expert like accountants. There we had to insist for an accountant so that they can give the correct guidance for coding in the software, which the companies, small companies are developing for the banks and financial institutions. There is also another area where I mean there is huge kind of opportunity waiting for this cost. I think these kind of tie-ups should happen Even big companies like TCS and all, they are also trying to get lot of projects from the banks. But we are seeing a gap in having a functional expert. So I think a role of cost accountants should also be valued there, and institute has to take a call, because lot of services software are being developed by big IT giants in the country. Even mid-sized IT giants like Polaris, like K FinTech, Night FinTech, like so many companies are there who are developing bank-related software where the functional experts are required. Risk management is one side, but functional expert like cost accountants can definitely contribute to the software developed by the fintech companies as far as this kind of financial sectors are uh, concerned. So I think these are the main thing which I thought let me highlight to the cost accountants, and happy to take any question if there is anything.
Yes, sir. So thank you, sir. I think it's a fag end of the day, but still you are there in to guide us and help us. So many of the members have joined in the online forum, and they are having a lot of questions.
Yeah.
Like uh, means many of the public sector banks, they are empaneling cost accountants in various assignments. Sir, in the speech also you have spoken about expected credit loss mechanism.
Yes.
So, do you feel CMAs can uh, get some assignments or activities regarding in ESL, which RBI is planning to undertake in the coming days?
Yeah, yeah. See, here I would like to give this thing that how it is happening. As I said, this ECL has been already implemented for NBFC, but it has not been done for banks. So banks are recruiting consultants. So I think this thing also, because banking projects are in different several crores. Okay, several crores of rupees this consultants are taking for the purpose of implementing ECL, and because it is a long-term project, so I think our professionals should tie up with the consultants, and also engage with the consultants, and some chartered accountant firms are also giving such services. So that way, CA firm and cost accountant firms can give services, but it is only for building the system now. Now, when the system is already in place, that time for follow-up, this professional's role will be much wider, because there are staging criteria. Staging criteria in there. In the one of the difference between ECL model as compared to present model is, in ECL model, I am expecting, I am providing, making provision for the expected credit loss. That is for standard asset, I have to make the provision, as against the present prescription where I am making provision for NPA account. So that is why, what are the staging I am doing? For the staging only, it will be for the staging only. I have to make provision. That is a critical part where the role of cost accountants will be important. So I think you need to study well about the India's that particular thing, and there I think tie up with the I mean consultants, as well as to with the firms who are giving services to the banks regarding ECL. That will be useful. Yeah.
Yeah. Thank you, sir. I think another question has come regarding in your speech you have mentioned about due diligence audit. Sir, CMAs are at par with other professionals for internal audit. Bank is also doing risk-based internal audit. So, do you feel as cost accountants are they eligible to do such audits, and how to go about it? Means whether individual members can do it, or it is a department which is doing that.
No, due diligence, as I said, due diligence reports is some of the big due diligence report we ask for from the professionals, including cost accountants. In our bank, we are empaneling cost accountants also for the certificate for due diligence. Okay, so
Right.
there we are taking the services. So here what we would like to know, what we are expecting is something beyond. As I said, if they get information about the companies ahead of public information, that will be useful for us. So they have to tie up with many kind of many kind of fintech companies, or some they have to take membership of some of the portals where from they will be getting such information. Then the quality of due diligence report will be better.
Right.
Okay, yeah, that way they have to prepare themselves so that the quality will be better. We are engaging due diligence cost accountants for due diligence report. We are taking for TB study also. We are taking for ASM also, agency for specialized monitoring. We are taking for stock audit also, credit audit also. So all the areas we are taking the services. Especially in our bank, we are impaneling a lot of cost accountants.
Right, sir. Sir, sir, in the case of various frauds which has occurred presently, like the IndusInd Bank, which is a glaring example, how do you feel that our institute or our members can prevent and protect the investors' interest by doing various sort of assignments and activities, which will prevent and protect both the banks and other stakeholders?
Yeah, see, I will to some extent pair the IndusInd Bank fraud with the PNB fraud. Okay, which is a complex in nature, and here also similarity is there to the extent of 50% similarity is there. What was there in PNB, the same thing was there in IndusInd also. Only thing here, foreign exchange was involved. A portion was IT driven, a portion was manual, a portion was automated. So what we have to see, as I said, auditors today need to come out of the ticking mentality to see the system. How is the system working? How the total framework is working? If anybody had studied the flow of activity in case of IndusInd Bank, then anybody would have realized that yes, it is flow is getting stuck somewhere. That is the gap. So that way, I think our professional colleagues should see how an activity, what is the flow of an activity, whether it is self covered. Okay, it is completing the circle. That way, it has to be seen. If one leg is done, another leg also has to be completed. I'm thinking broadly to give the IndusInd Bank issue, because that is a classic case. In our bank, we are not having that system, but they have got such system. So one case study I can explain about IndusInd Bank. So that is how the professionals have to be. I mean, alert today. They should not give by only tick mark. They should see that yes, how the system is working. So professionals should be alert, and professionals should see the system also to see that 100% it is completed. I mean, system is completed by its way. So that there is no gaps there is no control gaps. There is no control gaps. Okay, so that part has to be, because we are after an auditor. You have to see there is no control gaps.
Right, sir. Sir, sir, it means $1 million question is that since we are doing internal audit in various public sector and private sector organization, why not banks are allowing us to do concurrent audit?
Concurrent audit, as you say, I'll say some work is there for some of the people. Some lobby is also working. That is number one. But banks are nowadays increasing concurrent audit scope. Also, I will tell you, as a professional colleague, concurrent audit scope has come down because banks are doing that by our own staff itself. I'm not doing it from the outside. It's a very, very small number we are doing. So number of concurrent audit firm has come down, because what is happening in the industry, no, statutory audit has got more fees, less work. Concurrent audit has got more work, less fees. That is why professionals are also getting up, because whenever any fraud takes place, we first issue the letter to the concurrent auditor. We depanel him. Although I know whatever payment is being made to the concurrent auditor is not commensurate with the responsibility they are having. So I think concurrent audit has to come in a big way. I think institute also has to represent to the ministry about the concurrent audit, and concurrent audit can be done. Concurrent audit can be done to given to the. I think our professionals, police are equally capable. So concurrent audit is not a big deal. We should do this. And since we have got some kind of comfort in this, like the cost audit, so concurrent audit can be done. I think that is a good opportunity for all of us. But as I said, the compensation is still very, very low as compared to the responsibility which is assigned.
Right, sir. Sir, in the ASM which you have means highlighted, recently IBA has empaneled many CMAs have been empaneled as ASM, and we are very proud to say that because of our BFSI and other members like you are pitching for CMAs, so that more opportunities are coming for the institute in this banking sector. Sir, how do you feel that now NPA is a big challenge for many private and public sector banks? How the CMAs can help the banks to reduce that NPA burden through, because being a risk officer, I think this NPA part is very means I think risk areas or maybe a area of concern for you, both for project financing and various loans which you are disbursing for the public interest where many NPAs are happening. So, how do you feel that CMS can play a pivotal role in reducing such?
Yeah, see, as a risk officer, it is always believed that risk build-up takes place in good times. Okay, in good times we forget many things, we start relaxing many controls. Now this is a good time is which is going on now, because the balance sheet of the banks are strong, balance sheet of the corporates are strong. So corporates are coming asking, I'll not give personal guarantee, I'll not give corporate guarantee, I'll not give collateral security. Still you give me the loan. Banks are also thinking, okay, purana ja ho gaya, chalo dekhte hai, let us take the chance. This is how the risk build-up takes place. And here the role of auditors come. One of the things what is required by the professionals to ensure that, see, as I said, stock audit. Based on stock audit, we are arriving at the DP. Okay, na? And if the DP is not calculated properly, we'll end up giving excess finance. And excess finance is another one reason of an account becoming NPA and diversion of fund. Okay, so here the role comes of the auditor, be it credit audit, be it ASM, be it stock audit. Everywhere the role of auditors come, cost auditors come, and the cost accountants come to see that it is not needed to overfinance, and the amount which has been given by the banks for creating an asset, the end use is ensured.
Right. Sir, sir, in your speech, you have told that the challenge for banks is that fund management, like this various CASA ratios, is a challenge because the amount is migrating to mutual funds and other capital market instruments. So, how do you feel that as a banker, how to this manage both the CASA ratio and also to give a proper the depositors a proper investment forum so that they can invest in their future in a secured manner.
Yeah, see, whenever auditors are into the consulting business, I'll tell them, see, now fund allocation has to be there. See, in the bank, we are facing a ALA mismatch because, see, you must have seen the study that housing sector, public sector banks have taken 45% share of the housing loan market. All are more than 10 years. Whereas my deposit is up to 65 to 70% of my deposit is 1 year maturity, and that is getting repriced in 1 year. Balance only 10% of my total deposit portfolio is for more than 5 or 10 years. Okay, so that way that ALA mismatch I am facing. But as a consultant, whenever the cost auditor is being acting as a consultant for anyone, I think you have to see the risk, portfolio allocation also to different areas, and you have to see that how you are allocating the portfolio as well as allocating the risk. If somebody has got high risk appetite, then let them put money in different high risk assets. But it is not advisable because now the rate of interest is lower, but it will not remain lower. See, as RBI wanted growth over inflation, both government and RBI expect growth over inflation. That is why they have reduced the rate of interest. So what will happen? A lot of credit uptake will take place, and when the credit uptake takes place, money flow will be there in the system. Okay, so that way it will be kind of it will be a position where in economic growth will economic this thing will take place, and banks will be also getting interest income from the advances growth. But the rate at which I am giving loan today is at a very low rate. Housing loan I am giving at 7.65%. Whereas my deposit rate till recently was at 7.65% or 7.5%. If I add CRR and SLR, it will become 7.8%. So taking a deposit at 7.8, giving a loan at 7.6 is contributing to my negative NII. So banks are facing this challenge, an ALM challenge and a NIM challenge, NIM challenge. So but it is temporary. The moment these deposits are getting matured, they are getting a low interest rate. But government has kept certain things in mind. You know, government has is permitted for the this thing, no, for senior citizen loan deposit as a high rate that they have not reduced. So that way, those who are surviving on the interest, they will continue to survive based on the high interest rate which has been given by the government in specific scheme up to a certain limit. But deposit interest rate is going to come down, and maybe another 6 months to 1 year, the interest rate mismatch will get set right for the banks. But ALM mismatch will continue. So that is why banks are going for borrowing for long time. Infrastructure bond we are issuing. We are issuing other bond for green finance bond, which is for long tenor to address the mismatch.
Right, sir. Sir, so what do you feel the challenges presently the public sector banks are facing in balancing the social security aspects and also being a commercial organization?
No, now slowly, you see, government wherever government want this thing. I'll tell you that this government is not influencing the banks to give loan or to give OTS. Okay, government is telling you do business as a commercial bank. You adhere to the return on asset. Okay, but whenever we are promoting any kind of social security measures or we are introducing some special scheme for to support the poor, then you have to support them. Like government has started PM Swanidhi, PM Vishwakarma. PM Swanidhi means all this thelawala, na, all the thelawala who takes loan 1,000 rupees in the morning and evening they repay back 1,500 rupees. They are under the clutches of money lenders. Government is trying to, central government I'm talking about, central government is trying to get them free from the clutches of those money lenders. We have introduced a scheme called PM Swanidhi, where we give loan up to 50,000 to this telawala daily this thing, up to 50,000 rupees without any security. Just they have to get a confirmation that they belong to a particular place, and municipal, the respective municipal corporation has to give a confirmation they are the resident of this place and their Aadhaar card. That's the this thing we require. With that, they will be able to get loan up to 50,000. Thelawala who is selling fruit in a this thing thela. Okay, na. So this is one such scheme where government is pushing us to do. Okay. Number two, PM Vishwakarma. Vishwakarma mein there are so many vocational people. The barber is there, cobbler is there, there are tailor is there. Okay, for all these vocational people, up to 2 lakhs rupees, collateral free loan has been introduced at a very low rate. So there also they have to have a shop, and with that shop we have to see some turnover. But with that we are giving the loan. What I mean is this kind of scheme government is pushing a lot, so that the lower this lower segment of the pyramid, no, lower segment of the pyramid in the society in the thing, they get a loan. And study says that whenever I am giving 100 rupees loan to a lower level of the pyramid, the money multiplies at least 3 times. But if the same loan is given to a corporate, then the money multiply only less than one time. So that is why government wants to ignite the economic engine by empowering the lower strata of the pyramid.
Right, sir. Sir, I think you have discussed a lot of pertinent issues. I think many of the members joined online, and I thank wholeheartedly for your gracious presence. Being Today being an auspicious day, we are inaugurating. We have inaugurated our banking BFSI Chronicle and Banking Month both simultaneously. And I would like to say that from BFSI department and board, we are doing various activities, and I request as a proud CMA, you help our institute so that the connect between institute and the industry is revitalized, and we make opportunities for our cost accountants, and also the institute grows along with the various activities, and the banking fraternity also gets help from our professionals. With this, I thank wholeheartedly for your kind and gracious presence, and we also thank our chairman Chittaranjan Chattopadhyay. Unfortunately, he could not make it today. He is traveling right now, and he would be joining on Saturday our second webinar, where he would be present. And I also thank our president, vice president, our other council members for their continuous support to BFSI board and various activities of the BFSI department. With this, we close today's first webinar of this banking month. I thank you, sir, and all the participants. Good night, sir.
Thank you. Thank you. Good night. And I'll continue my effort to uplift the standard of cost accountants. And wherever opportunity comes for cost accountants, I'll be definitely highlighting this to BFSI team so that you can take it forward.
Thank you, sir. Definitely, sir. We will be with you, sir.
Okay,
Thank you, sir. We are closing today, sir.
Thank you.
Sir.
Good night. Good night. Thank you.